Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Doomberg from the very popular Doomberg Substack. Doomberg, thank you so much for joining us today.
Elijah, always a pleasure. You're looking especially dapper today, I must say. That's a pretty good looking suit you got on there.
Well, thank you, and you're looking great as usual. We really did want to have you on today. Obviously, we're seeing a huge uh, volatility in the markets. We're seeing the stock market up, but very significant for our viewers. We are seeing kind of one of the biggest down days in metals we've seen for a while. This follows Friday's huge plummet in metals as well. It's kind of like the escalator up, right? But or the you just kind of jump off the a lot of people have talked about how in bull markets, you go straight up. If you go straight up, you go straight down as well. So what is your take on what we're seeing in gold and silver at the moment?
Yeah, I think the expression is stairs up and elevator down.
That's what I couldn't
That's
remember. Yeah.
happy to help you out. Yeah, it's been a true Icarus print with gold. In particular, that's the one that we own and that we watch most closely, although, of course, silver has been on a bit of a tear for its own idiosyncratic reasons as well. I personally took about 20% of my gold holdings off at the open on Friday. Just kind of felt like things had gotten a little extended. Then we had a classic double top. If you're looking at sort of 1 month chart, tried to retake that high yesterday and got turned back, and so now we're seeing 8-10% down. Our core position is unchanged. No, we were joking before you hit record that we haven't seen prices like this since last week. My God. It's been an incredible run. Um, there had to be a sell-off, shake out some loose hands. I'm trying to figure out where I'm going to put that 20% back to work here. Catch myself a falling knife.
Certainly. So I guess looking at where we are, a lot of technical analysts are still looking for lower prices. Not all of them, but a lot of them are seeing a correction, a further correction. What is your view on that?
I don't know. I mean, I'm not really a trader, as you know. It's not what we do. I'm happy to own the gold I have. I wouldn't have added more last week, which is why I took a little bit off. But there is a price probably around 4,000 where I'll nibble back in. If I'm wrong, fine. But at least I saved myself, 350 bucks on 20% of my portfolio. My gold portfolio, not my total portfolio, to be clear.
Certainly, certainly. And one of the big stories in the last couple of weeks as well, I wanted your take on is the backwardation we're seeing in the silver market right now, with silver futures about $1 off, or even more dramatically, off of spot. So, what is your take on that, and what's happening in London?
Yeah, it's not a story I follow particularly closely. A good friend of mine, Sir JJ over at Market Vibes, jj745.substack.com, big into the silver trade, has been for a long time, has been writing about it since the low 30s, as I recall. I'd go see his views. There's a short squeeze and reports of, countries running out of silver. London had some delivery issues. This was all sort of cleared up on Friday. And now we're seeing that sort of post-crisis air come out of the balloon a little bit. Silver is more of a wild market, and it's a different metal than gold. It's a quasi, mostly industrial metal like platinum and palladium. And so it's just not a market that we follow all that carefully. So I'd be relatively uncomfortable pretending like I have something intelligent to add on it.
One of your recent posts highlighted the trade tensions we're seeing between China and the US at the moment. I wanted to really dig deeper into that. What do you think the financial impacts of that are at the moment?
But they could be substantial unless and until a détente is reached between the US and China. I think the US administration is wildly underestimating China's leverage in this trade war. This is something we've been writing about for years, as you know. I've spoken about it multiple times on your show. China has escalation dominance, and until the U.S. spends the 300 to 400 billion it needs to, invest the 300 to 400 billion it needs to chip away at China's escalation dominance, it's in no position to be provoking trade wars. And I think the expansion of the 50% rule, as it's called, the expansion of essentially sanctions to subsidiaries of companies that are on the entity list is the proximate cause. I've since read, of course, that perhaps China stopping the purchase of U.S. soybeans is what led Trump to do that. But then the seizing of Nexperia and all the stuff that we've been writing about, China is more prepared for pain than Trump is. They have pain tolerance dominance, as one of the Substacks we subscribe to, whose name escapes me at the moment, mentioned in their piece this morning. But also, I think they have escalation dominance. Like if they shut off access to rare earths, every automotive assembly line in the Western world would be shut down in 6 weeks. Um, that's escalation dominance. We have no similar leverage with the Chinese. Yes, they export a lot to the US, but they export way more to everybody else. And they run a Communist Party totalitarian regime, and they can inflict pain on their population at a far higher rate than Trump would be willing to tolerate. Trump watches the stock market notoriously. And so the US bluff will be called, and a reasonable deal will be achieved. And this will be a substantial, not just symbolic, but a real victory by China in the next phase of what we describe as World War III. You know, the moment we saw what China was doing with rare earths, we posted on Substack notes that China has total escalation dominance. The U.S. would have to beat a retreat, and China will win this next battle of World War III. And that's how it will be viewed by Russia, India, the global South. That the big bad bully, Orange Man Bad, was stared down by the Chinese and won. And some listeners might not want to hear that, and we could be wrong. That's our view based on our analysis of the situation.
You mentioned how this kind of is the start of World War III. I mean, what do you mean by that, and how bad do you think it can get? And it seems like, as you mentioned, if China has the upper hand in this, that's certainly not good for the U.S.
No, so actually, our view is that World War III started around 2014 in the aftermath of the Crimea affair, when the U.S. sanctioned Russia, which shocked Russians and Putin. And so Putin dumped his U.S. treasuries and started buying gold. And we view World War III as a battle between the U.S. and its allies, the Western-based U.S. dollar financial system, um, against the BRICS countries, Brazil, Russia, India, China, South America, and all the others who have since joined. And China has been stealing for this fight for a long time, and it must now feel that it's in a position to finally win it. Um, the U.S. does not have escalation dominance in a conventional war against Russia, and that the U.S. does not have escalation dominance in a trade war against China. These are two battles of World War III. This is how we believe historians will view this period, and it's certainly how the internal propaganda in those countries I just mentioned views what's been happening for the past several years. And Trump, love him or not, he always assumes he has escalation dominance. And against many countries, he does, particularly those that currently are home to a U.S. military base. China and Russia are not in that category. And so, unless Trump is willing to use nuclear weapons, which he isn't, thankfully, um, Russia will grind away in Ukraine and China will win the trade war. By the way, that is a sobering reality that should cause a serious wake-up call. And we're seeing that in the U.S. administration. There's going to be hundreds of billions of dollars flowing into diversifying away from China. That's not just making America great again. That's Australia, rare earths, pick your favorite, Argentina, Vaca Muerta, the whole Colombia snafu has a lot to do about energy as well. Venezuela. The reason why Trump can't send Tomahawks to Ukraine, not just because it would probably provoke nuclear war, is also because the U.S. is going to attack Venezuela, and this is the new war that keeps the Forever War Party in Washington satiated, sad as it might sound. And at least with Venezuela, A, the U.S. could probably win it, and B, they get the oil riches when they do. Cynical as that sounds.
I mean, you mentioned the kind of losing the war in Ukraine, right? And also China having the upper hand here, and this being very bad for the US. It seems like one of the things that it makes the US dollar the world reserve status, that has the world reserve status, is that the US has such an impressive military, right, and power around the world. But if that is slowly shifting, it seems like that would have a negative impact on the US dollar as well.
The U.S. cannot be the global reserve asset slash currency and reindustrialize in the way that Trump and the Pentagon knows it needs to. So we are seeing seminal shifts, historic shifts, shifts on the scale of leaving the gold window in the 70s play out in real time. And investors would be wise to ignore the media and see reality for what it is. It is very bullish for gold today, notwithstanding. It's bearish for the U.S. dollar against gold. It's hard to see how the European Union survives this breakup, but the world is bifurcating, and 40 years of hollowing out of Western manufacturing needs to be undone in 5. So this is a once in a generation investing opportunity if you play your cards right. But it is also a game changer. It's the end of the US dollar-based Western financial system as we know it. We're going back to multipolar spheres of influence and, trade accordingly.
Do you think the US, I mean, as you mentioned, it seems like Trump kind of realizes this scenario that we're in. I mean, do you see that the U.S. is preparing to kind of lose the trade wars in some sense, and also have the va dollar, the value fall, and the world reserve currency status slowly go away?
Yeah, well, in a bifurcated world, the US dollar is still very important. US treasuries are still core reserve assets. They're just not neutral anymore. Gold is neutral. Gold is nobody's credit. And the dollar value of global reserves of gold versus treasuries is closing fast. It's like a pincer that's closing. And we expect, again, today notwithstanding, you can't draw long-term trends based on one panic sell-off. That trend, we suspect, will continue. And there'll be a price at which buyers will come back in and catch this falling knife. We will be among them, and go from there. But yeah, I think it's very hard to model what the end of a 40 or 50-year run looks like and what comes out the other side of that singularity. But China's been preparing this for decades. We wrote a piece earlier or late last week called Gloves Off. The rare earth move was an economic nuclear war declaration. And the US got caught with its pants down. For all the bluster of Scott Bassett on CNBC, China has the power to do significantly more damage to the US than vice versa. And China has the ability to withstand far more pain than the average American consumer or investor has been experiencing for the past 4 or 5 years. They run a surveillance state. The US runs a relatively free society. And Trump cares about the stock market more than anything else. And if all the automotive assembly plants are being shut down and the appliance makers can't get chips to finish their products, and things could get hairy as we saw in COVID. And so that's what China's threatening. Now, the old classic taco trade, right? Trump always chickens out. I don't think he chickens out. I think he realizes as a negotiator when his bluff has been called and there's not much he can do about it. And so he just takes the L and moves on. And I think he'll do that with China. And that's kind of what the markets are pricing in right now.
You obviously focus heavily on energy. That's mainly what your Substack is focused on. I did want to ask you, with this geopolitical change, how do you see that impacting energy markets? I know we've seen oil quite depressed in recent months, and also uranium you cover as well. What is your take on energy markets at the moment, and how this geopolitical shift is gonna impact them?
Yeah, energy, physical energy markets are extraordinarily well supplied. As you know, we have been flagging this for years and even debated the peak cheap oil crowd who think $100 a barrel is just around the corner. They still exist. That no amount of data can change their content strategy, I suppose, is one way to call it. But we have been fairly consistent that the world is very well supplied with oil. There's engine switching. China is taking a huge amount of coal and making liquids out of it. Guyana, Argentina, the US shale patch is not rolling over, whatever the peak cheap oil truthers would have you believe. If you had listened to Doomberg when we did our peak cheap oil debate on Adam Taggart's show, we said, look, the gold to oil ratio is 25 or 30. It's going higher. It's now at 70. Well, it was at 70 before today. And oil is flat. And we've often said if you insist on buying a commodity, just buy gold. Um, there's a huge amount of oil. There's an infinite supply of natural gas. Natural gas is displacing oil in certain downstream demand applications. Um, buying oil as an investment, buying any commodity aside from gold as an investment is like buying volatility. You just get ground down day after day after day. The long-term real price of all commodities is lower. And we would shy away from investing in any commodity or any commodity producer aside from gold, which is not a commodity, it's a monetary metal.
Now, with respect to energy, I mean, it seems like that's one thing that uh, people on our channel, I guess, on a side note, people are concerned about inflation, right? They're concerned about the dollar, the value of the dollar, and that you say, gold will probably do long term, good long term. But it's important to note also that not everything during inflationary times rises at the same time. If there is a lot of supply of oil, for example, it's not like that is going to necessarily be impacted by inflation. Your take on that for those looking to invest during inflationary times, right? What are the considerations that people should be looking at?
Yeah, look, the Bloomberg index inflation adjusted oil price is $17.75 a barrel today as we're recording this. You're correct. Not everything goes up nominally during an inflationary period. And in fact, um, computer chips, televisions, the classic, the subset of technologies that are highly deflationary. And oil and gas companies are deflationary machines. They bring the real price of oil and gas lower. Look at natural gas today, 350 million BTU. It's that $20 a barrel gas, infinite supply. Um, if the US if the US government put a floor price of just $5 a million BTU, the production of natural gas would double. There's so much of it. People don't realize that. There's just so much of it. And same with technology, computer chips, computing power. Whenever the deflationary power of technology companies, and I would include oil and gas companies as highly technical, they're technology machines. Whenever the deflationary rate of those companies is higher than the inflation rate, the nominal price goes down. And we see that in many markets. Sure, the price of other things is going to go higher. Housing, pick your favorite, whatever the CPI index says is running hot. But food and oil, those types of things, because again, look at the inflation adjusted price of corn. Look at the inflation adjusted price of soybeans. It's always lower all the time, and people don't realize that. And so because the U.S. is an energy gigapower, it doesn't have to pay everyone else's cost of capital to access its energy. And so the U.S. has a lot of advantages long term to fight this trade war with China. And I do think this has been a huge wake up call the past month in the U.S. administration. But the U.S. dollar debasement is not universal. Um, and so what you need to do as an investor is find those subsectors that actually grow faster than the rate of debasement and park your money there.
Turning back to, I guess, what is really happening today, and obviously we're on a live stream right now, so we're seeing the price of precious metals fall significantly. But long term, as you mentioned, precious metals typically do pretty well in times of inflation. And some people have said that they kind of anticipate inflation. So, did you want to, I guess, remind our viewers in days like this when people can get shaken out? What is the best long-term disposition to have here?
Yeah, so the gold isn't really an inflation story. It is a replacement of U.S. Treasuries as a neutral reserve asset for the settlement of imbalances in international trade, which is a line that I've stolen from our friend Luke Groman, who's been more right about gold and Bitcoin than any analyst that I've read. He's just done an amazing job over at Tree Rings, Force for the Trees. And I think he's right. And so on time days like this, look, if we don't invest in gold, we save in gold. So we earn money in fiat. We live in the fiat system. We buy groceries with dollars. We pay for gas with dollars. We pay our taxes in dollars. We save by buying gold and land and real assets and collectibles. Then we invest privately where we can affect the outcome. And the hope is that our private investments compound at a much higher rate than the basement of the US dollar. Um, and so if the price of gold going down 8% today meaningfully hurts you, you have too much gold. Gold is one part of our savings portfolio, which is one part of our net worth. And if gold drops further, maybe I liquidate some land and buy some gold. If gold has an Icarus print like I felt it had done on Friday, maybe you take a slice off and wait to put it back to work at a lower price, which is what I plan to do. Perhaps even after we get off this live stream, we'll see. I'll watch the market. Again, I'm not a trader, but I don't mind trading around a core savings position like gold. But broadly speaking, the price of gold was 4,100 bucks last week. You know, we saw this like in uranium, when it got up to 110 or whatever it was. It jumps from 90 to 110, everybody gets excited, and then the maximum pain trade becomes let's pull the rug out on people. The classic he bought meme for Bitcoin. And so we don't get too excited on days like today. Most of the gold I own was bought in the, you know, 13 to 1500 range. It's mostly in my retirement account. 20 gold eagles will buy me a mid-sized, well-appointed SUV in 10 years. Happy to own 20 gold eagles at a time. And so that's our view on gold. Nothing to get too excited about.
Yeah, I think that really framing it as savings, and also people have said, count your ounces, not your the value of your gold in dollars. I think is a interesting perspective, right? Because gold and silver have been real money throughout history, and if we just think of them as, savings to put away for the long term, I think
Mhm.
these daily price fluctuations can, um, you know, you don't have to worry too much about those price
And
fluctuations.
look, if it goes to 3,000, where it was a few months ago, well, that's quite the drop. A reverse Icarus, maybe, sell some watches or sell some land and buy some gold. I'm not too worried about it. I'm young enough that I have a long-term horizon, and I'm happy to own an ounce as I do. Um, again, it was an unnatural move, Elijah. The price of gold is not meant to double in the global reserve currency in 15 months like it did. That's unnatural. That usually foretells war or major financial change. If you look at the price of gold during the Weimar hyperinflation, there were huge drawdowns. But if you just bought and held your gold through all of it, you'd be glad you kept it. In a way, the price of gold going down like this is bullish for the rest of our portfolio because, I don't want the US dollar to collapse. I don't want, complete debasement of the currency. I don't want hyperinflation. Thank God for the US oil and gas industry, the bulwark of the economy today. So that's where we are. Nothing to panic about.
We do have some viewers' questions here. One of them is a question with respect to Ukraine. How do you see that playing out? The war, in your opinion, is going to be lost on the U.S.-Ukraine side. How
Yeah.
do you see just Ukraine surrendering, or how do you see that playing out?
Unless and until Zelensky is either quits or is removed from power, the war can only end militarily with Russia dictating terms. We see this now, the supposed meeting between Putin and Trump in Hungary has been postponed shortly after Zelensky left the White House, which, according to the Financial Times, was quite the, you know, um, tense meeting, let's say. Others would call it a row or a very tough meeting. And Zelensky then goes on TV and says he's not giving an inch to Putin. And the Russians have rejected outright any freezing of the conflict on current lines just so that Ukraine could be allowed to rearm. They're just not going to do that. And so, and the U.S. is not in a position to send the weapons or the money that Ukraine needs. We're writing a piece later this week about the fiscal situation in Ukraine, which is wildly underreported in the West. Um, and so the two will fight. It's a civil war, and Russia knows how to win wars of attrition. One of the things I would caution people against is looking at maps and measuring this war in acres. Wars of attrition aren't measured in acres, and they tend to end suddenly. And Russia has been fighting a systematic war of attrition. It is the larger country with the bigger military, with the bigger and more sophisticated military industrial complex. It has not yet declared a full war on Ukraine. They still characterize this internally as a special military operation. They're capable of escalating. Um, Ukraine is basically out of air defense weapons, and Russia's going to soon be launching 1,000 drones a day into Ukraine, powerful drones. And they're systematically taking out the energy grid in Ukraine, which is a war crime. We've said this consistently. War crime is kind of an oxymoron. I think all wars are crimes. We're wildly anti-war. But Zelensky um, is in a position where he can't concede anything, and Putin is in a position where he doesn't have to concede anything because he's winning militarily. Now, this is wildly opposite of the things you'll read in The Economist and sometimes in the Financial Times and sometimes in the New York Times. They lie to you routinely. We try our best not to. We publish under our masthead. Our views are authentically held. We come at them authentically. We live and die by our subscribers. If we're wrong, people will unsubscribe and our business will suffer. Um, but the legacy media consistently lies to you when they're lying to you about the state of the war in Russia and Ukraine.
Well, Doomberg, we really appreciate your time today, giving us this perspective that we don't see on the mainstream media. People can go to doomberg.com for your Substack there. And I also understand a member of your team has started a new Substack. And one of the things that I really like about it, I haven't checked it out. You just mentioned it before we started recording, but you mentioned how it's one of your teams reading the classics, so something completely different and maybe a good way to step away from the noise for a little
Yeah,
bit. Can you tell us a bit about that?
sure. Yeah. Doomberg co-founder and its editor-in-chief has launched her own passion project called Classics Read Aloud. The tagline for Classics Read Aloud is you're never too young or too old to enjoy being read to. It's produced with the same quality and brand excellence as the Doomberg project. It's produced by the same Doomberg team. Classics from a century or more ago that short stories, novellas, novels that are really great hidden jewels, a little essay introducing them. And it's really well done, really high quality work. We've launched it on September 1st. We're already up to 2,500 subscribers. It's been really well received. And I know, looking at the bookcase behind you and as sharply dressed as you are, that you're a man who enjoys the classics. And if you enjoy classics, this is done really, really well. A very high class way to enjoy some really great stories and novels. So give classicsreadaloud.substack.com a chance. If you enjoy it, subscribe and hit the like button a few times. That'd be great.
Fantastic. Doomberg, really appreciate your time for this live stream today. Thank you so much, and God bless.
God bless.